You ever look at a stock chart and your brain just kind of shuts down? All those lines and colors, it feels like you need a special degree just to understand it. But what if I told you it's not nearly as complicated as it looks? Today, we're going to pull back the curtain and learn how to read the story that every chart is trying to tell us. So, let's get into it. Okay, so take a look at this. At first glance, it's just a mess, right? A jumble of red and green bars, a few lines going in different directions. It's really easy to just look at this and think, nope, not for me. But trust me, every single thing you see here is a piece of a much bigger story.
And that's the key. This isn't just a spreadsheet turned into a picture. It's a drama. It's a story packed with conflict, tension, and, maybe, a big finale. Our job right now is to learn the language of this story, to find the secret messages hidden in plain sight.
At its very core, every stock chart is just showing a battle. It's a constant, non-stop tug-of-war between two groups, people who want to buy and people who want to sell. And once you understand that simple conflict, you've got the first key to unlocking the whole thing. So, let's start with one side of the fight, the buyers. They create something called a support level. The best way to picture this is as a price floor. It's a point where, whenever the price drops to it, buyers step in and say, yep, that's a bargain, I'm in. And all that buying action stops the price from falling any further. And you can see this floor in action right here. Look at those three spots circled on the chart. Each time the price dropped down to about $4.50, bam, a whole wave of buyers rushed in. They literally caught the falling price and pushed it right back up. That's a strong floor. Okay, so what about the other side? The sellers. Well, if the buyers build a floor, the sellers build a ceiling. This is called a resistance level. It's a price where sellers tend to say, all right, good enough for me, I'm taking my profits, and they start selling, which stops the price from going any higher. And this chart gives us a perfect picture of that ceiling. See that green line sloping downwards? That tells a really interesting story. It shows that every time the price tries to rally, sellers jump in at a slightly lower price than the last time. It tells you they're getting a little more eager to sell, which creates this constant downward pressure. So let's recap. We've got a solid floor that won't break, and we've got a ceiling that's pressing down lower and lower. What do you think happens when these two forces start getting closer and closer together? Well, this is where it gets really fun. You get a pattern that traders call a squeeze. The price is literally getting trapped between the floor and the ceiling, getting squeezed into a tighter and tighter triangle. It's like coiling a spring. All of that energy is getting compressed, building up an incredible amount of tension in the market. And you know what happens with a coiled spring, right? Eventually, it's gotta pop. It has to release all that stored up energy. In the market, that release is called a breakout, a really big, really fast move. So the million-dollar question is, which way is it gonna break? Up or down? To figure that out, we have to play detective and look for more clues. Okay, this is it. Let's dig into the final clues and see how they all point towards a prediction. This is where we put all the pieces together to see who's more likely to win this battle, the buyers or the sellers. Our very first clue is all about energy. You know, any big move is going to need some power behind it. Think of it like a car. Does it have enough fuel in the tank to go anywhere? And the answer is a huge yes. We find that fuel in what's called trading volume. And whoa, look at that number. Over 11 million shares were traded. That's not just a little bit of interest. That is a massive amount of activity, showing a ton of people are intensely focused on this stock, right at this price. So why is that such a big deal? Well, a huge volume like this tells you that the fight happening at that floor is absolutely real. It's a heavyweight match, not just a small skirmish. It proves their serious conviction. A move on low volume is kind of flimsy, but a move with this much fuel has some real muscle. All right, our second clue is a little more subtle. You have to look really closely at the very last move on the chart. It's like finding a footprint at a crime scene. It tells you who was there last and what they did. Okay, zoom in with me to the far right edge of the chart. See those little red and green bars? They're called candles. Now look at the very last one. It's green. But here's the crucial part. Look at where it is. It formed right on top of that strong $4.50 floor we've been talking about. That is no coincidence. So a green candle means the buyers won that day's battle. The price ended higher than it started.
You can see the sellers were trying to push it down. Those are the red candles just before it, but at the most critical moment possible, right at the support line, the buyers drew a line in the sand. They stopped the bleeding and showed they're still in the fight.
So let's put all the evidence together. You have a rock-solid floor. You have this squeeze building up pressure. You have a full tank of fuel with that massive volume. And you have the buyers making a final successful stand. Based on all that, the analyst who put this together makes their call. And that big green arrow says it all. They're betting the buyers are going to win and the price will break out, upwards.
And they're not just guessing. They have a specific target in mind. The prediction is for a move all the way up to that descending ceiling, which would be around $6.09. From where the stock is now, that's a potential gain of over 30%. That is a significant move.
So, we've decoded the story the chart is telling us. But you know, a chart doesn't exist in a vacuum. To really get it, you have to ask, why this company? Why now? We have to connect these lines on a screen to what's happening in the real world.
And this isn't some random company. It's Lithium Americas. The name kind of gives it away, right? They're in the lithium business. And lithium is the magic ingredient in the batteries for every electric vehicle and for storing energy from wind and solar. With countries all over the world, especially the US, pushing hard to build their own supply chains for critical stuff like this, a company that mines it in North America, well, it's right in the middle of a huge global shift.
And that's when it all clicks. That battle between buyers and sellers on the chart, it's not just about numbers. It's a small reflection of this massive global story, the race to transition to a green energy economy. The tension you see in that chart is mirroring the opportunity and the demand in the real world.
But, and I gotta say, this is the single most important thing to remember. No chart is a crystal ball. It cannot predict the future with 100% certainty. This kind of analysis is a tool for understanding what's probable based on how people have acted in the past. It's about stacking the clues in your favor, not about knowing for sure what's going to happen tomorrow.
So think about that. We went from a confusing mess of lines to a clear story of a battle, a squeeze, and a potential breakout, all tied to a massive global trend. You now have the basic tools to read this language. You can spot the floors, the ceilings, and the hidden clues. So the next time you see a chart, you won't just see data, you'll see a story. And the only question is, what's it trying to tell you?